As most of you know, Juneteenth commemorates June 19th, 1865, when the last group of enslaved Americans in Texas was finally informed that the Civil War was over and that they had been freed by the Emancipation Proclamation 2.5 years earlier. So Juneteenth is a very sacred day for Black Americans because of what it represents. Now, last year on Juneteenth, we were in the middle of two national crises: a pandemic that was taking the lives of Black Americans at 3 times the rate of white Americans, and a racial reckoning that had people in the streets for months protesting the pervasive injustices that systemic racism creates in the lives of Black and Brown Americans each and every day. In March, Ms. Breonna Taylor was killed in her own home by police officers after she had completed a shift as a first responder. And then in May, Mr. George Floyd was murdered by a police officer in broad daylight on camera. Then in June, a 25-year-old Ahmaud Arbery was hunted down and killed while jogging. So needless to say, our entire country erupted into protest over systemic racism, and these protests even reached around the globe. And the world soon came to understand that Black Americans live with this daily, that we live with systemic racism that is so deeply embedded in our nation's system because it is a remnant of slavery itself, our nation's original sin. Now, around this time last year, there was another awareness that shed light to systemic racism that's not often discussed publicly, and that is systemic racism in the banking industry. We learned from an investigative report of WBEZ that in the time period that they studied, lenders had invested more in a single white neighborhood in Chicago than they had in all of Chicago's Black neighborhoods combined. Wow. And when I say that, it's so alarming that I want to repeat it. That lenders had invested more in a single white neighborhood in Chicago than they had of all of Chicago's Black neighborhoods combined. In a way, that really was a stunning statistic, because it spoke to the scale of disparities between white and Black Americans that have been a backdrop of Chicago's story from the beginning of our city's history. It shined a harsh light on the level of disinvestment that our South and West Side neighborhoods have suffered and what decades of disinvestment have done to our communities. But in another way, it was really no surprise to those of us who live in those neighborhoods. We know what our blocks look like. We know what our friends and family members deal with when trying to get access to capital for a mortgage, a car loan, or a small business loan. And so I hope you heard what I just said, that unfortunately, we know what people in our communities deal with when they're trying to access capital to purchase whether a loan, mortgage, or the like. And some of us, unfortunately, have experienced it ourselves. Another problem that we saw was that banks have been exiting Black neighborhoods. Branches have been exiting a lot of neighborhoods, really, but they're disproportionately leaving Black communities. According to data from S&P Global Market Intelligence, between 2010 and 2018, the branch footprint in majority Black areas shrunk almost 15% compared to almost 10% in non-majority Black areas. And income really doesn't explain the gap either, because even when there are wealthy Black neighborhoods, they have also lost more branches. But low income communities really suffer the most because those individuals who live there become more likely to be unbanked, which leaves them vulnerable to predatory lenders like payday loan centers and check cashers which charge sometimes up to 400% interest and trap people really just in a cycle of debt. We also know that the financial services industry does not represent diversity of our country. Last year, McKinsey found that in entry-level positions, only about 10% of financial service professionals are Black. Now, when you get to the C-level executives, it's down to about 3%. Black professionals are half as likely as their white counterparts to be promoted to manager, senior manager, or senior vice president. So with that, and all of what we've seen over this last year with the killings and the practices that keep Black people from owning homes and the lack of representation, with all of that, this is why we are here. I am so proud to be partnering with State Treasurer Michael Ferrix. And we came together last year and said, enough. Now, while we cannot address all of it, and we certainly cannot change things overnight, we are both the Chicago and state treasurer. So we know that we can do something about it. So we put out a call for banking CEOs who had heard our concerns and our outrage and were ready to say enough with us. Now, we know that these problems have many solutions, and they're not all private sector solutions. Government must play a role. And I'm proud to say that the Illinois Legislative Black Caucus achieved a major victory this spring when Governor Pritzker signed their economic reform legislation, which cracks down on predatory payday loan interest rates and create incentives to financial institutions for providing lending and banking services to economically disadvantaged communities through the Illinois Community Reinvestment Act. But the private sector, at least in theory, should be more agile than the public sector. And we want banks to want to make these changes and not always be forced to do them. So in June 2020, last year, we engaged 11 banks, and together we formed the Advancing Equity in Banking Commission. Each bank, in their own way, has committed to leveling the playing field for Black and Brown communities through equitable hiring, lending, and investment practices. The commission focuses on 3 pillars: talent development, lending to consumers and small businesses, and community investments with partners. The first step of doing the work of the commission really involves an assessment and understanding of the situation. And the next step, the most important, would involve coming up with recommendations and best practices around fixing these problems, followed by implementing those changes. The last step, of course, would be measuring and monitoring. We don't want to just implement and walk away, which is an ongoing process that we would like all participating banks to commit to. We've been working together over the last year diligently, and we realize that our participating banks are at different stages, and we'll talk about that today. So today we're joined by 4 of our bank members, and we've come together to share with the public some of the details of that progress. But first, I'd like to transfer the mic over to my partner, my colleague, State Treasurer Michael Ferrix, to share some of his opening remarks as well.
Treasurer, thank you very much for transferring the mic to Mike. Good afternoon to everybody, and thank you, Treasurer Conyears-Ervin, for your remarks. I also want to thank you for your partnership to form this commission and keep this very important conversation going. I'm looking forward to hearing the progress from our bank executives, but before we dive in, I also want to say happy Juneteenth weekend. I'm also happy to say that Juneteenth is now both a state and a federal holiday. I want to remind everyone that it was a great Illinoisan named Abraham Lincoln that signed the Emancipation Proclamation on September 22nd, 1862. And on January 1st, 1863, all of those who were enslaved in states in rebellion were officially set free. Yet for 2.5 years, 2.5 years, although those in Texas were free, they did not know they were free and therefore did not reap the benefits of their freedom. And I think it's important to frame this conversation in my remarks in this way. Being free, yet not being able to benefit from that freedom, is not really freedom at all. So whether it's 2.5 years or even one day, if you are free and can't live free, that is far too long. Together, we must break this cycle. And there is no time like the present to make changes and knock down the barriers that have held African Americans back for many years, specifically today in the banking industry. We in Illinois want to lead the way by bringing the banking industry, government, and community together to address the decades of financial inequities and identify the barriers to career advancement for African Americans, people within the industry. In my office, we know that diversity is good for business. Now, I would not ask any of you to do something that I have not done myself in the Treasurer's office. We are committed to systemic change and the advancement and implementation of diversity, equity, and inclusion. So much so that we were very proud to work with Illinois Legislative Black Caucus to encourage economic development and lending to underserved people and communities. $150 million in investments in CDFIs and MDIs in Illinois. We will leverage our investment portfolio to invest in community development financial institutions and minority depository institutions. These types of institutions have a track record of investing in minority communities. Implementing a $50 million loan guarantee pool to offset any perceived risk on the part of financial institutions while limiting the exposure of the state, the loan guarantee program will encourage financial institutions to lend in communities of color and low-income communities in Illinois. Successful loans will help to establish the viability and opportunity of lending in communities of color and low-income communities. Requiring mandatory positive CRA to do business with the state. The Illinois State Treasurer reviews a banking institution's record of commitment to its community when deciding whether to do business with that financial firm. Banking institutions with a Federal Community Reinvestment Act or CRA rating below satisfactory are now ineligible to do business with the office. Under this option, we would expand upon this policy by requiring all public funds in the state of Illinois to only do business with firms with at least a satisfactory CRA rating. We know firsthand it is possible to create dramatic change across the financial industry sector with relative ease, without increasing costs or sacrificing any level of service. It only takes a willingness to acknowledge past failures and a sincere desire to change. So today we come together because we are banking on equity. We want equity to emerge from within the industry to repair some of the harm that has occurred within the financial services sector. Since last year, we have seen many of our institutions and corporations step forward to address systemic racism within their organizations. We have even witnessed corporations terminate relationships with employees who have exhibited racist behaviors in public settings. For our country to be all that it really can be, our systems must change to be more equitable and more just for all residents and not just for some. It is long overdue and time that we are collectively banking on equity to improve the communities that have been systemically left behind, divested from, and redlined. To our executives on the panel and other participants of the AEBC, we are banking on you to drive equity in talent and workforce development, and how you innovate new products and services, and finally, how you invest in low to moderate income communities. Our traditional way of life and how we do business has been drastically altered by the novel coronavirus. Many small businesses have been decimated. My office has helped to lead the charge to help save some Illinois businesses through our small business COVID relief program. When the pandemic hit, we moved quickly to make $500 million available to small businesses to help them stay afloat. The pandemic forced all of us to adjust, pivot, and to drastically change the way we were doing things at home and at the office. So we know now more than ever the power that we have, the power that we must use to do things differently. And that's the kind of urgency that we hope to convey in this Juneteenth conversation. Today, there are people in communities who have been denied mortgages and business loans. They can travel just a few blocks or to neighboring communities and see what financial freedom and community investment looks like. I know that changing the culture and core of how you may approach business can be difficult and slow-paced. But we know firsthand the impact COVID-19 had on our operations. It forced the traffic flow on every avenue of business to change its natural course. So what does this tell us? It tells us that we can, in fact, change business models when we have the will to do so and courageous leaders guiding the way. When we set aside that $500 million to capitalize banks and credit unions so that they, in turn, could have small businesses push through this COVID-19 crisis, this was at a time when the PPP loans were also available. However, many lending institutions were not open to new customers. And that meant that many African-American owned businesses were once again left behind. As Randy Hultgren, the president of the Illinois Bankers Association, stated in the WBEZ story from last year, that has in many ways convened this body, we've got to do better. And some of our banking partners joined us in June of 2020 to commit to doing better. And by October of last year, some even shared how they plan to do better. We appreciate you for being willing to answer the call and accept the challenge. We hope you continue to step up to the plate and look forward to hearing some of the changes you are making in your institutions. I want to thank you all for joining us over this last year and today on this meeting. Now, I'd like to officially welcome our panel today, which is made up of some of our banking members' CEOs who will share their progress to date. Joining us are Scott Swanson, president of PNC Illinois, Eric Smith, vice chair of U.S. Commercial Banking at BMO Harris, Tony Maggiore, Midwest chairman and managing director of commercial banking at JP Morgan Chase, and Mark Hoppe, president of Chicago region at Fifth Third Bank. Thank you all for joining us here today.
Thank you, Treasurer Ferrix, and thank you, panel, for being with us today. And now we will jump in and hear from our panel of what they have been doing over this past year and what we can look forward to ahead. So first, we're going to begin and we're going to talk about talent development, which is one of the pillars that I mentioned during my introduction that we on the AEBC as members are working to address. Now, if I had $1 for every time I've heard a company say, we're trying to hire diverse talent, but we just cannot find them, I actually think I'd be a very wealthy woman. My office has done a lot through the Chicago Treasurer's Office around not just introducing young people to the kinds of jobs that exist in the financial service industry, but also introducing the financial service companies to the highly qualified but underrepresented people who want to access those jobs. But we also need companies to change the practices and policies that keep barriers in the way of equitable representation. So Scott, let's start with you. What progress have you made in identifying, hiring, promoting, and retaining people of color, specifically Black and Brown employees at PNC Bank?
Well, yeah, great question, Treasurer Conyears-Ervin. And I want to thank you and Treasurer Ferrix for bringing us all back together today. And it's great to be here with Tony and Eric and Mark. Hard to believe it's been a year since we first convened for this important collaboration to define ways to truly drive the systemic change that's critical for us to ensure that we are ending systemic racism and creating opportunities for everyone within our community, and in particular our Black and Brown communities. From the hiring perspective, racial equity within our employee base has always been a key priority. We realize that what makes us different actually makes us stronger, and that our highest performing teams are diverse. As you've highlighted, there have been times where their organizations perhaps has reflected not being able to achieve perhaps the expectations they've set. But I will say we have felt very good about the way that we have been able to bring diversity within our organization. I always like to think that the lived experience of our employees, where they come from, the neighborhoods, the communities of our employees really does matter to how we're going to bring our capabilities out to communities throughout the Chicagoland area and throughout the state. And so given that our employees are our most critical asset, we are committed to attracting and developing and retaining diverse talent. And we set actually an expectation, and we've heightened that expectation in terms of how it's woven into our leadership standards, how our leaders are recognizing the importance of driving diversity within our employees base. And in fact, as I reflect, we've got about 2,600 employees in the Chicagoland area. About 70% of all of our employees are actually, the most senior leader for those employees is Black, other peoples of color, and women, and actually over a third. In fact, our largest business is managed by a Black leader who happens to be one of the finest leaders I've ever worked with in my career, and has been one of the key champions who has really helped to drive diversity and inclusion within our organization. But we are fortunate that has helped us to recognize. And as you look at our core contributors throughout our employee base here, about 50% of our employees are people of color. And so now, while that is the case today, and we feel very good about that reflection, it isn't enough. And in fact, one of the things that we've realized is we really need to ensure much of what we do is to promote from within. And so as actually I look at our intern class this year, 80% of our intern class, we have a development program to develop future prospective employees of the bank. 80% of that class this year is diverse, which does certainly demonstrate that focus on diverse talent, and certainly is significantly greater than had been in the past. And that really is a key driver to our future. We have also established some internal programs to ensure that we're creating the transparency, the conversations to overcome, really, as I like to kind of characterize it, an opportunity for us to look in the mirror, to make sure that we are doing the things to ensure it's an environment for our employees to bring their whole selves to work. And we engaged 160 of our most senior Black leaders to engage in candid conversations around our challenges and opportunities in recruiting and advancing and retaining Black talent. And that really is driving both our policies, the way that we're recruiting externally, our focus on historically Black colleges and universities, and also colleges and universities throughout the Chicagoland area to be more effective in driving that opportunity to really enhance and diversify our employee base to be the best that we can be, and to ensure that we're in fact enabling that to translate into how we engage in the community and deliver our capabilities to create opportunities for investment in consumers, in businesses, and create and really overcome that wealth gap that we talk so much about. So huge priority for us, and one that will continue as we even drive amongst the practices that are shared today to ensure that that we are realizing that full diversity and inclusion to maximize our ability to be woven into the community.
Wow, Scott. Wow, that was a mouthful. That was great, Scott. Thank you for that, and really sharing your commitment for diversity in talent. That was great. Thank you. And so I will go on to Vice Chair Eric Smith. BMO announced some new diversity goals. Can you tell us about what that announcement was and what those goals are?
Sure. Thank you, Madam Treasurer and Treasurer Ferrix. It's a pleasure to be here, and happy Juneteenth to all that have joined. I'm very proud that last September, shortly after we met, we announced zero barriers through 2025 by setting goals that we want to make sure that we're able to achieve. I think the first step, similar to what Scott shared, is making sure that there's truth and acknowledgement that there have been structural barriers that have not allowed for equality and diversity and equity in banking. And we needed to make sure that we were being intentional about how we address that. So our goals specifically call for us to achieve 30% representation in our senior leadership for people of color, and 30% in our internship class and in our entry-level positions. We believe by maintaining that balance that we will be able to retain, attract, develop the top talent and the most diverse talent in our workforce, and that we can continue to be an employer of choice by doing so. I'm very excited that as an African American in this moment in history, that we're able to recognize the need for diversity and our workforce to make sure that it reflects the rich diversity of the communities that we serve. And we're very, very pleased to be able to have these goals in place because we know what gets measured gets done, and accountability is very important. And we look forward to driving those goals. In addition to the goals around racial equity, we also look forward to maintaining the gender equity that is important, of 40 to 60% of gender equity within our leadership rank. But as we look specifically at the opportunities that we see around racial equality, this is a moment in history for us to make sure that we're being bold and transformative. I'm also pleased to be joined by several very outstanding African-American leaders that are part of our team here at BMO. Our head of human resources, our chief diversity officer, our chief risk officer, our CEO of asset management, our chief risk officer are all African-American, our head of treasury services. And we believe that there's still significant opportunity for us to continue to make improvements across each of our lines of businesses and at all levels of the bank here at BMO.
Excellent. And the reason that we started with this question is because when we get into the other questions, it will all kind of make sense. When we talk about diversity, equity, and inclusion, we always talk about the workforce. And so I really appreciate the work that is being done and really great information being provided to the participants that are listening. Now, who are the internal and external partners who help you achieve your goals in this area of talent development? Did you work with any consultants? Talk to us about how you kind of came up with these goals at BMO.
So it was very important for us to start with a commitment at the top. Our CEO made the decision that this was going to be an important initiative that would be measured like any other business objective that we have. Our board provided the support, and our management team developed the strategy to implement. We also worked with our diversity council to recognize where are the needs and the opportunities for us to achieve. And in doing so, put a strategy in place that would guide us towards success. What does that strategy look like? It means being very intentional on how we're looking at hiring and recruiting practices, making sure that diversity is a top priority when we're on campuses and when we're looking at the entry-level positions that we're looking to hire for. It also means looking specifically for diverse talent for lateral hires and for senior people that we're looking to bring into our organization. It means that we're focused on development, that as we're thinking about succession planning and we're putting diverse slates in place, that we're creating a level playing ground so that people have an opportunity for those opportunities for advancement within our organization, that we're creating a culture of diversity and inclusion that is very important. And lastly, I'll share that one of the other things that is very important is that we have metrics in place that we're constantly measuring to make sure that we're achieving these goals and that we're being honest around where we have opportunities to drive continued improvement. So it's really been, I think, a very exciting journey to be on. We know that change doesn't come overnight and that it's a multi-year sort of approach, and that these issues and barriers that we faced have been something that have been prevalent for far too long. It's important because we recognize that the decisions that are being made around the table affect the communities and the clients and the customers that we serve. When you talk about the challenges that we had around PPP, it was our ability as leaders to be able to acknowledge that and to make a decision to say, we're not going to require minority clients and women-owned businesses to be existing customers of BMO in order to represent them in applying for PPP. It means that we're able to give voice to the opportunities that we see in investing in our communities and our lending practices. And these things are very, very important to our future. We also believe that diverse talent leads outsized performance, and that's something that's very important for our shareholders.
Diverse talent leads outsized performance. Is that what you said?
That's what I said.
Thank you, Eric. Okay, so these next two questions that we're going to conclude this area of talent, because this is such an important topic. I want either Tony or Mark can certainly jump in here. What is your current process to ensure equitable representation of Black leaders in your executive leadership? And what commitment, if any, have you made to your board of directors on this front? And again, anyone can respond.
I'm happy to jump in. So thank you again for hosting us on such a important topic and important day. And I think I've said this in a different form. I think everybody on this panel would agree. While we may compete for business amongst each other, we don't compete on this topic. We partner on this topic. The outcomes and the stakes are far too important. We all want to make a difference in the community, and so it's a real pleasure to be on the panel with everyone. And I think to just pick up on one of the earlier questions as well, at least here at JPMorgan Chase, what has changed? We hired a new head of global diversity and inclusion, Brian Lamb. I think something that's important to mention, and a few, Eric and Scott kind of touched on it as well. Culturally, I think all of our institutions are going through a change, probably quite similar, which, for example, we've had mandatory D&I training for every one of our employees globally, not a subset, but everybody. We have a program called Advancing Black Pathways, which I think is important to point out. And this, we have a 5-year goal, hiring 4,000 Black students. We're 63% of that goal. So I think what you're hearing from all of us is the emphasis on trying to get real achievement and moving the ball forward. And I think, to your point, Madam Treasurer, I think all of us want to get the best talent. And I think we've had to change our ways from a recruiting standpoint to be more inclusive in how we recruit and kind of look through a different lens. And I think over the past 4 years, we've increased the number of Black professionals in our most senior ranks, particularly our managing directors and executive directors. And I heard Eric and Scott kind of touch on the same. True leaders, they're up by more than 50% within our firm. So you're seeing the commitment, the emphasis, and the passion. We also launched, and I think Eric just touched on it, an accountability framework. I think this gets back to metrics and holding people accountable. An accountability framework that actually touches our board of directors, Jamie, our operating committee -1, 2, 3, if you would, people that are all in senior leader roles in which your performance, including pay, is tied to a series of metrics and outcomes that we desire to advance, more equitable, racial equity. And I think maybe picking up on a point Eric just said, it does come down to accountability. You can have all the data you want, and you can have all the right sentiment and ideas, but somebody has to be held accountable. And that's ultimately us, truthfully, as the senior leaders with each of our firms. So we're very focused on accountability and having that discussion, not once a year during an annual review, but throughout the year, so we influence the decisions at a much faster rate. So maybe I'll pause and let Mark jump in as well.
That's great, Tony. Go ahead, Mark.
Yeah, thanks, Tony. And Treasurer Frerichs and Madam Treasurer Conyears-Ervin, thanks so much for having us have the opportunity to talk about this today, talk about the progress that we've made in the last year. We like to go back farther than that. I think we've been making changes over a period of time, but there's no question, not a question at all, that there has been a greater focus since all the events that have happened in the past year. There's been a greater focus in our company on diversity and equity and inclusion. And mentioning that, I thought it was ironic that Tony mentioned Brian Lamb as their new head of diversity, equity, and inclusion. And Brian Lamb worked for us for many years, and they stole him from us. But all right, if you want to feel good about it, Tony, no, he's phenomenal. And it was a sad day in our company when Brian left, but obviously for a great opportunity. And but I think that does show, some of the talent that we have, the diverse talent that we have in our company. Unfortunately, he decided to take his talent elsewhere, but I think that does show a little bit about it. So talking about, the diversity and inclusion, one of the areas that I would like to mention is in Chicago anyways, our financial centers. In our financial centers, they're run by a gentleman by the name of Jose Pina. And we have 178 financial centers, 39 of which are managed by Latino or Latina financial center managers. 22 are African-American run. And so we do feel that particularly through that area of the company, that we've made some great strides. We haven't made as great strides in other areas of the company, and we're working on that and focusing on that. So one of the ways that we're looking at doing it is through what we call our leadership development program. And we probably hire 30 to 40 people in the Chicago area in our leadership development program every year. And it's through that we're focusing on diversity. And I actually don't have the exact numbers for the diversity of the last 2 classes that would be 3 classes that we've hired, since we had our first meeting a year ago, with our new commission. but that is the big focus. And we feel that's maybe one of the best ways to get our diversity. We put a great emphasis on our leadership development programs throughout the company. And those are the leaders of the future. And we feel that is the best way for us to, be able to have a real meaningful growth in diversity of our employment base. We have a specific commitment to our board of directors for diversity. Our board itself is quite diverse, about 40% diversity, and so they hold our feet to the fire. And there's active involvement from the board of directors and looking at us and what we're doing. Another one of the things you asked about was the talent management process, and that is the focus of the talent management process. And it's not, as Tony alluded to, it's not something we do once a year. We're doing it constantly. We're looking at that, and we're challenging our managers on how they're doing as it relates to obtaining more diverse talent. So I think we've done a good job on the hiring side. It was about 4 years ago that we started to focus on extensive recruiting program from historically Black colleges and universities, and that's been good. We've been able to get diverse talent through internships that we've had during the summers. Many of those have turned into jobs, and really the focus of the internship program is on minorities. And again, that is a way, kind of from the grassroots that we're able to get some diversity in our employment base. So, with that, I'll return the mic back to you.
That's great, Mark. Two things that you said that I just wanted to piggyback on, and we'll go to our final question here with talent development. Number one, and all of you spoke to this, the partnership with historically Black colleges and universities, that we really want to focus on diverse talent. And then you also spoke about internships and the importance of internships. So for those parents that are listening, I'm glad that you brought that up, Mark, because I think that's an important aspect that our children really can, that's a great way in is through internships. And you said many of those led to permanent employment. So really great point.
I'll just make one more comment on that. The internship program this summer, was these young adults were recruited, probably started in January, February, and that type of thing. And of course, everything we were figuring was going to be remote. And these kids started to come on in, I guess about 2 weeks ago, 2 or 3 weeks ago, maybe 4 weeks ago. And I was talking to the program leader, and I said, where are they? They said, well, we're working remotely. And I said, we can't do that. And they're all from the Chicago area, so there's a little bit of a challenge there. I said, well, you have to bring them in. And last week, I think I met probably about 15 or 20 young adults. And I said, we got to bring them in. At least half of the program has to be here, because you can't get an effective program like this meeting's effective. We learn how to make these effective, but not to, 19, 20, 21-year-olds. They need to be on site. They need to understand, what it's all about from that perspective. Our young people have lost so much by not being on site, and we did bring everybody back as of about I think it was the 17th of May, and you just have to be here, and that's what I said about these interns. They have to be here for at least half the program. So
that's great, Mark.
Hopefully that'll help all the way around. That's
great, Mark. That in-person touch training, that's awesome. Thank you. All right, so final question, and I'll turn it back over to State Treasurer. Actually, I think I have one more question after that round of questions, but nevertheless, what would you say is the biggest challenge in achieving equity in leadership, and how do you plan to address this challenge? Anyone can respond to that. What would you say is the biggest challenge in banking to achieving equity in leadership, and how do you plan to address this challenge? Or some recommendations that you have?
Madam Treasurer, I'll share maybe just a brief thought, and that is something that I think is really key to having a solid career in banking. It's a formula that I once learned from a mentor, and it's that success equals excellence plus exposure. And as African Americans, we often don't have the opportunity to demonstrate our excellence, and we don't get the same exposure to be able to advance within our organizations. So from that, I see the challenge as being the cultural barriers that we have to be able to break down within our institutions in order to make sure that there is clearly diversity, equity, and inclusion within our organizations.
Yeah, I'd love to pick up on that, Eric, because I think it's something that's somewhat similar. I don't know if you can define the biggest challenge, because there's so many challenges that we all want to achieve together. But I think one of the challenges is what Eric touched on. And in our shop, it's around sponsorship, like really taking, people kind of abuse the word mentorship a little bit, but really having passion for kind of guiding somebody through their career. And one area that we found to be, and I'm sure many institutions do this today, we have what we call these business resource groups, which you may or may not be familiar with, but nicknamed BRGs. And I think there's a nice part of the solution there, which was, we have 110,000 of our colleagues across JP Morgan that participate in these BRGs. And that being, for example, one group is called BOLD, which is the Black Organization for Leadership Development. And that provides our employees, specifically those obviously of African descent, an opportunity to be empowered, communicate as a team, as a group, kind of elevate, escalate any of their concerns, challenges, provides a professional environment for them to kind of pursue a career and personal development. As you'd imagine, we have Adelante, which is for Latino and Hispanic, very similar. So I think, and there's many, many more than that. I'm sure others all have similar structure. So I think, sponsorship, mentorship, we often talk about, that's a one-on-one relationship, but I think getting together as a group, talking collectively as a group of here are my challenges within JP Morgan, how do I solve them, what's your advice, that actually has been pretty successful.
Yeah, I would just jump in. I agree. Certainly, I think we all share some of the similar advice and similar kind of internal efforts. But the other thing is that we've actually really broadened our reach in terms of cross line of business promotion. So one of the things that we found historically is that perhaps we've had colleagues who've started within the bank in one line of business, and all too often people followed a path only within that one line of business, which may not have in fact had a lot of promotional opportunities or the ability to really develop management skills or span of control and influence on our organization. And we've really set a firm expectation that we broaden that lens and make some challenging and bold decisions about giving people an opportunity cross line of business, and then supplementing it with ways to help fulfill where they may have some experience gaps, but really enhancing our development programs to really maximize an opportunity for success. And really create that opportunity in areas where we may see faster growth, where that an individual could have then really a more exciting path to really having a broad influence on our organization, and that's really made a difference.
I'm going to add on a little bit regarding the business resource groups. I think we've got 12 or 14 in the Chicago area. I'm just talking about Chicago. I'm not talking about the entire company. And by far, the strongest one is the African American Business Resource Group. And that group is run by 2 young African American women. And they're dynamos. They are phenomenal. They are going to be stars. And I hope they remain stars in our company. I'll tell you, I'm going to do everything I can to continue to provide them challenges and opportunities, and the entire group. But it is seriously by far our most successful, and Eric knows a little bit about this, right? Because he was involved with it, when he was working with Fifth Third, and it's a real strength. And I think it's really opened the eyes of a lot of people in our company. Exactly what we're talking about, this kind of awakening that's happened over the last year, and in a specific case like ours, I think that has happened. And I'm really proud to say that is the most successful and the one that has the greatest outreach in our company. And I'm further proud to say it's 2 young. I think they're both in their 20s. I don't think either of them are even 30 years old. Really phenomenal. So I just wanted to mention that, Tony, kind of made me think
In
of
their
it.
20s.
ARGs.
That's awesome. Young, diverse talent. That is awesome. Thank you. And then as we conclude this question, I am going to just throw this in for those that are listening because everyone may not know this. I have an undergraduate degree in finance, and my first job out of college was at one of these financial institutions on this line. That's all I'll say. I won't name who. So look, small world. All right. So now let's talk about lending. Big topic too. So many important topics. Oh my gosh. Let's talk about our second pillar that we asked our committee members to address as part of the AEBC. And this part is very near and dear to me specifically because I know the lack of access to capital that our residents in underserved communities experience. Being able to access capital, whether for a home or a car or starting up a small business, is really the key to creating generational wealth. I talk a lot about creating generational wealth, and lending is key. Access to capital is key. And our country has an extraordinary racial gap when it comes to generational wealth. According to the Federal Reserve, the average white family holds 10 times the median wealth of the average Black family in America. 10 times. But as I've said dozens of times, I know so many people who do not necessarily have the best credit score, and they might live in a disinvested neighborhood, but they never miss a $1,500 rent check each month. I know people like that. And where is that money going, right? Into somebody else's pocket without earning the renter a penny of equity. So I'd like to pose some questions to the panel. We're just going to open it up because this is a big topic. First, how has your institution changed its approach to mortgage lending within the communities of color since the inception of AEBC? Anyone, jump in.
I'll jump in on that one. So with respect to residential mortgages, we've made a number of program and policy changes in the last year. Some of the changes are we've reduced the minimum credit score for residential mortgages. We've also broadened categories of income that are eligible for mortgages. We've expanded our down payment program. And in addition to that, we've also layered it. In other words, that our down payment program can be used in addition to, in the case of Illinois, IDA has down payment programs. So those are some of the things that we've done on the home lending side, and those are important. I'll tell you something interesting. You know who was pushing for those the most? Were the mortgage lending officers. The MLOs were saying, we are missing opportunity here. You've got to do some of these things. And I thought it was very ironic that they were the ones that really got the ball rolling here. So I think that's important. And, we've got in regard to, small business lending, we've got CDFI partners and through a program, Entrepreneurs of Color, that actually we helped, we and Chase started up, and now there are probably 4 or 5 other banks that are associated with it. That has provided some tremendous loan opportunities for small businesses, and with the majority of the small businesses that we've helped through that program are businesses owned by people of color.
Yeah, and I'll jump in and just add to that a bit. We, like Fifth Third, and I know many organizations, we've realized that, one of the barriers had been, the ability to afford just the down payment and the awareness of that within Black communities, low and moderate income communities, helped us to develop a better PNC closing cost assistance grant, which had initially been $1,500. We've increased that to $5,000, which we found really captured a lot of that to really ensure that upfront cost of the really the down payment costs and closing costs weren't really the barrier to home ownership. We have lowered our FHA credit score requirements. They had been 660. We've lowered them down to 620. We've lowered our portfolio affordable lending program credit score requirements down to 640. We've worked with Fannie Mae on another streamlined refinance program that has lower fees, waived appraisal fees, really with a target audience of low and moderate income individuals and communities. And so we too are trying to overcome some of those barriers because, Madam Treasurer, as you had highlighted, we know that we've got a great opportunity to create the pride and the benefits of home ownership. And so when you really assess what were those barriers to at least get into that home, because we know that their families would like to be able to build that opportunity, build that sense of ownership, build the equity in that home and create that opportunity. And we found that these were some of the programs that really helped to ensure that we were able to serve and help to create that solution. Mark had referenced some. I think we're going to have an opportunity to talk about some of the community investments, but I think it is important. Part of this also is investing in the communities to ensure also that the homes, the neighborhoods are realizing improved benefits by eliminating food deserts, by ensuring that there's other infrastructure investment to really create a better opportunity for wealth creation and opportunity. We can go into some of that later, as I know you want to focus on lending specifically now, but it really is critical. This is a multifaceted issue to ensure we're really driving wealth creation.
Yeah, love to jump in. I think this is a great topic for all of us to comment on because it's really the heart of what we're talking about today in a great manner. And I think hopefully, a lot has happened for all of us over the last year, but at least at JP Morgan, I'm sure many remember about, last fall, we announced a $30 billion commitment to advancing racial equity, $30 billion nationally over 5 years. And that's $8 billion in mortgages nationally, which is 40,000 home purchase loans, $4 billion in refinancing, about 20,000 refis. But specific to Chicago, which is, I know what we're here to talk about today, we deployed $600 million. In fact, Chicago was the launch point for what we call the Path Forward. The $30 billion commitment was the first stop on the tour. And that $600 million is specifically directed at home ownership amongst 3,000 Black and Latinx homeowners in the South and West sides, throughout the Chicago region, but particularly the South and West sides. And I don't want to duplicate because I think we're all doing some wonderful work on home buyer grants, closing costs. I think we're all trying to do a much better job of helping that homeowner get that first home. But we're also on the investing side hiring local home lenders, people that, going back, I know we all love a digital framework these days and we all live by our phones, but actually meeting with somebody in person in a branch of one of our community centers to get honest advice how to navigate what can be perceived as a complicated process. We think that's an important part of the puzzle, which is actually meeting with somebody face to face and getting their guidance and advice and helping them not make a mistake in the application process. And then also, we'll probably talk about it a bit later. Don't want to leave out, there's a lot of small business need out there, particularly in the South and West sides. And part of our $600 million commitment is directed also at small business. And I'll touch on it a bit, but we also had a very wonderful announcement yesterday with another $150 million with very similar themes to what I just talked about. So it's really $800 million over 5 years directed at these communities on behalf of our firm.
I'm a big fan of Tony and the work that JP Morgan is leading. And I think it's important for all of our banks to make sure that we're stepping up to provide access to capital, which has been one of the greatest barriers. Like many of my other friends here, we announced last year a $5 billion 5-year commitment called BMO Empower, really to focus on helping to promote an inclusive economic recovery. Of that $5 billion, approximately $3 billion is specifically for community development and neighborhood revitalization. And we look very closely at our types of mortgage products that we're able to offer to make sure that we're providing that assistance to first-time home buyers. Scott touched on that in a wonderful way. And I think maybe just one additional nuance that I would share is that too many of our residents are strapped with student loan debt when they're graduating from college and trying to buy a home. And Madam Treasurer, when we were last together, I shared that BMO had announced a program last December that offers buyers the chance to receive assistance of up to $40,000 of student loan forgiveness as they're looking to buy their first home. Those are the types of opportunities that help to address, to your point, the racial wealth gap that has existed and that continues to widen. Making sure that we can provide assistance to folks that are looking to provide renovations and home improvements. That's something that is really important. And so having A program like BMO has offered to provide loans of $20,000 for those types of initiatives, again, goes to the heart of how we address the wealth gap that's out there. There's still so much more for us to do, but being very intentional on how we're approaching it and providing the access to capital and reinvesting in communities that have been left on the sidelines for too long is essential, because I think one of our ultimate goals that we want to look toward is making sure that regardless of what zip code a child is born into, that they have opportunities to succeed in life and that those barriers will not prevent them from achieving their greatest potential.
Awesome. This is awesome. And so what I like about this, and I know we have to move on, you all know this stuff is just so near and dear to State Treasurer and I, but there's not one thing, right, that you're doing. You're doing a combination of things, and that's what it's going to take to really be able to impact change. So I thank you for that. We thank you for that. And this conversation has been very helpful. Now I want to ask a specific question. I'm going to start with you, Scott, and if anyone wants to jump in, but what criteria or programs have you created to qualify more individuals within these communities? In other words, what has changed to qualify?
Well, I think, yeah,
I think you all kind of answered that, but
so I do think we did at some level. I mean, I think the things that I think you heard from each of us is that there was a recognition, there was a need to, one, provide, this additional closing cost assistance, additional down payment assistance, but also importantly, and Madam Treasurer, you referenced this in your remarks, was just really the impediments that credit scores had created and some of the unintended consequences. And so, we have lowered our FHA credit scores, our portfolio of affordable lending program credit score requirements, is to ensure that that wasn't itself the barrier that would create access to capital and access to home ownership. And so those have really been the big drivers, which I think has been shared and then complemented by the other investments. All of us, I think we certainly have shared in increasing our staffing in the communities to ensure, as Tony had very appropriately highlighted, the importance of actually having an advisor, someone to talk to work through, to understand the best way to access capital and achieve, the dream and the opportunity to be a homeowner.
That's great. And I know that everyone just eloquently elaborated on that. So I will go on with our last question in this area. What will success look like? Let's talk about that. And how are you integrating racial equity as an integral value in your business practices? What will success look like? Anyone, jump in.
Well, I'm very optimistic about our economic recovery. And I think as part of that, we have to make sure that this recovery doesn't leave folks behind. And so as I look at specific metrics, I'll be looking at the racial wealth gap. You highlighted some of the key specifics. Right now, I think the Brookings Institute has suggested that the average white family has wealth of approximately $175,000, whereas the average Black family has wealth of only $17,000. So how that looks from an economic standpoint to me will be very important. I think it will also be important to think about employment. We have to make sure that we're providing jobs and workforce development in communities of color. And that means that we have to support small businesses. Janet Yellen put it best. During this crisis, Black businesses were the first to close their doors. Blacks were the first to lose their jobs. And unless we're intentional, we'll be the last to be rehired. And so we have to make sure that the public and private sector is working together to provide job creation in communities of color. Those are the essential hallmarks of what will make for a thriving community. I think it will also be very important that as we look around the banking community, that we see the diversity firsthand in terms of the leadership ranks and throughout our organizations at every level. So those are just a few, I think, of the outcomes that I'm looking for. And then ultimately, I want to make sure that we're building a very vibrant pipeline of strong minority and women-owned businesses. As we look at the Fortune 500 list today, we see iconic companies like Facebook and Apple and Disney, but none of them are Black owned, Madam Treasurer. And we have to make sure that we're getting back to a place where we've got Ariel Capital Management and Johnson Publishing and other minority and women-owned businesses that are being invested in, that we're providing access to capital to, and that are then also providing jobs in our communities and helping to make our ecosystem and our country the thriving country that I know we can be.
So I'll jump in. I'm going to talk about Eric, I think that's phenomenal. The initial part of your comment was, that kind of I put in the terms of equity or parity, right? And we failed in that. Every one of our banks, all the 4 banks represented here, have terrific CRA ratings, but that doesn't tell the full story, right? And there's much more that we have to do. As we come out of this pandemic, Eric said it better than I could. We've got to have our eyes wide open and make sure that we're treating opportunities with equity and parity. I'll mention one thing that to be quite frank, I'm very embarrassed about. In the city of Chicago, we only have 4 Black mortgage loan officers, and that's just not right. And we've made a commitment to increase that, to triple that. And I don't know that that's enough, but that's a start. And it'll give us an opportunity to be more successful in diverse neighborhoods in the city of Chicago. And we have to be better, and we have to get better, and we're going to get better. And, I really wanted to mention this because it's an embarrassing situation, right? But we're going to rectify it, and it's a high priority for us. It's a high priority that the president, we've got a new president of our company that he and I have talked about a lot, and we're going to make it happen. And so that's a small, a small start, but you got to start somewhere, and that's one of the many things that we're going to do.
All right. Anyone else before we move on? We're good? Okay. I will now turn it over to State Treasurer Michael Ferrix. This has been awesome. Thank you for the transparency, the honesty. Mark, that was such an honest comment. We appreciate that. That's really what this commission is all about. Here is our public transparency. State Treasurer.
Great. Thank you, Treasurer Conyears-Ervin. Now to a third pillar, community investment. As an extension of community investments, our community partners are critical. As we mentioned earlier, many of our Black and Brown communities have experienced significant decades of disinvestment that is not entirely caused by the banking industry, but has in some ways been compounded by it. And so given that reality, I'd like to ask each of you, thinking differently about community investment since joining the AEBC. How does racial equity factor in at JP Morgan? So we'll start with Tony.
Yeah, no, thank you. Wonderful question. And I think, for us at our firm, and I'm guessing for all firms, we have a responsibility, if you would, to intentionally drive economic inclusion for people that have been left behind. And so again, there's some operative words there: responsibility, intentionally, inclusive. And I think particularly in State Treasurer, you mentioned it earlier, with what's occurred with COVID-19 and the crisis which we're thankfully coming out of, that's exacerbated, as we all know, this long-standing inequity for particularly Black and Latinx people around the world, for that matter. We're talking about Chicago today. So it's kind of the moment, the catalyst to create change, which I think is why we're all here. And I think you're hearing a lot of great positive development from all of our institutions, and build an economy, as Eric said, that can sustain itself on an equal basis for all. And that's what we're focused on. I think you're going to hear a lot about, you've heard a lot about many of us already committing dollars, but I think it's more than just dollars. I think what we've also realized from the difference since AEBC has been created is the commitment to our employees, our colleagues, the passion that we all have for the city. So while the dollars are important, it's also the mindset, the behavior, and the engagement of our employment base that I think is very eager to help with the solution.
Right. Thank you, Tony. As you all know, community development financial institutions, or CDFIs, are private financial institutions that are 100% dedicated to delivering responsible, affordable lending to help low income, low wealth, and other disadvantaged people in communities join the economic mainstream. So my question is, what partnerships have you forged with not just CDFIs, but also community stakeholders, faith leaders, small banks, and housing associations at Fifth Third Bank. I'll give it to you, Mark.
Thanks, Treasurer. Well, we've had longstanding relationships with a number of CDFIs, in Chicago, and we work with them on a number of fronts, a number of different ones. CIC, national housing, and last year, right after the pandemic, as you recall, the Mayor's Small Business Resiliency Fund was looking for funds, and through Allies for Community Business, we contributed. We made a grant of $1 million to fund support for CDFI, for them underwriting loans. The other second one that I referred to a few minutes ago was the Entrepreneurs of Color, and we started that, I believe it was in 18, and through the fourth quarter of 2020, through the Entrepreneurs of Color Fund, we've done over 850 total loans, dispersed $15 million, resulting in the creation of almost 1,800 jobs, and what we believe was the maintenance of over 3,000. And of those 850 plus loans, 570 are minority-owned businesses, and 352 are women-owned businesses. So we're really proud of that. We couldn't do what we do in the community without those CDFIs. They can be our eyes and ears, and they really show us where the need is. It's not easy for us to always say, gee, I know the need is here, the need is there. And, as large as we might be, we really have limited resources, and we need the CDFIs to help show us where those opportunities are. And we know that with their help, they're going to be able to, better place that money, in opportunities that are going to create jobs, that are going to create opportunities for people to grow and develop. So they're absolutely critical to our ability to be successful, in communities of color in the city. So they're it's a table stake, if you will.
Great. Well, thank you, Mark. Minority depository institutions, or MDIs, are banks and credit unions that are majority owned or majority governed by people of color. Can you all tell us what lessons you've learned from CDFIs or MDIs that you've worked with at BMO? Eric?
Thank you, Treasurer Ferrix. I think one of the key lessons that we've learned is that these minority depository institutions serve a very important role for communities because they have gained and earned the trust of the residents. I think all too often, many of our residents are concerned by the fees that they're charged by banks, by the lack of customer service, and the opportunities that they have to cultivate a banking business or relationship with us. And so we've had to recognize that it's important to break down some of those barriers. We've all talked about some of the changes that we've made around some of our lending practices to make sure that we're able to have that sort of outreach, but we have to go further than that. We have to also think about banking the unbanked and the underbanked. And that's what I think the minority depository institutions have been doing. I think we also have to recognize that it's not acceptable to simply tell a customer no, that your loan has not been approved. No needs to come with an additional explanation of what you can do or what you need to do in order to get your credit profile on the path to being approved for a loan. It needs to come with a message of what are the other opportunities where you can find access to capital. And so we view minority depository institutions as equal stakeholders and as partners that we want to make sure that we're supporting and investing in and working with. And I think that is really a key to how we will think about economic recovery going forward.
Great. Thank you, Eric. Community partnerships are key to the way an institution operates and invests in communities of color. Because community organizations can serve as a direct link to the needs of the community and the people who live there. So can you all tell us why community partnerships are valuable to your institution? Let's start off with PNC Bank. Scott?
Yeah, sure. Thanks, Treasurer Ferrix. Actually, it was this time last year that PNC announced the $1 billion commitment specifically to help end systemic racism and support economic empowerment of Black Americans in low and moderate income communities. And so a big part of that here in Chicago is the way that we do work with CDFIs and community organizations. And as Mark had kind of highlighted, really for us, CDFIs are able to access communities that either don't trust banks or require more assistance. And so they are critical partners for us. It's why we're among the lead investors in Community Investment Corp, NHS, RFLF2, which provides rehab loans actually, IFF, LISC, Community Reinvestment Fund, Self-Help Credit Union, which also owns Seaway Bank. And also focusing on other areas like community healthcare. We recognize that's a critical, we've talked about how we help to enhance and create wealth opportunities within communities, a part of the home ownership conversation we had. It's also important to have stable and affordable healthcare and access to healthcare. So we've worked with organizations like Esperanza Health Center in Brighton Park, Howard Brown Health Center at La Casa Norte's Pierce House, the Prime Care Center in Belmont Craig, and most recently Mount Sinai Health Center at Ogden Commons in Lawndale. Another big issue, and that's key to partnerships, is really affordable housing. There's been a real concern that access to affordable housing obviously hasn't met the needs of our communities, and so we want to enable strategies that grow and subsidize and help to create additional opportunities. We actually have a preservation fund, which actually acquires affordable housing inventory that is at risk of going to market rates. This includes most recently Island Terrace with 240 affordable units, which is actually going to realize the gentrification within the construction of the Obama Presidential Center. It's in Woodlawn, and this was a real opportunity to ensure that these units would remain affordable. So we helped to stabilize the property before agreeing to sell to POA. And so just an example of ways that we're trying to work. We've done similar things with Levy House in Uptown, and also other housing communities, over the last year in particular, to really ensure this preservation and actually expansion of opportunities for affordable housing. So these are all critical areas in terms of ways that we develop partnerships. Another is really around the wealth creation and access to equity capital. And so we work with organizations like Breakthrough Urban Ministries, Sunshine Gospel Ministries, Chicago Housing Authority's Early Learning, and Altgeld Gardens. All of these organizations we feel are really helping on the education front, on creating economic empowerment and opportunity. And in fact, you will hear in the next month, we're going to be announcing specifically an opportunity to create access to equity capital for small businesses in Black communities, because there's been an extraordinary gap. In fact, there's been research suggesting that some 80% of the equity need for Black and brown businesses goes unmet every year, and we're going to try to help to fill that gap. So these partnerships are really the most effective way that we've used to ensure that we're actually getting capital and support and education directly into the communities where it's most needed.
Great. Thank you, Scott. Let's move to Mark in Fifth Third. What challenges do you typically face in establishing community partnerships?
Well, I guess there's one thing is there is no lack of need. There's no lack of people with good ideas. There's no lack of quote unquote opportunities out there. What one of the challenges we have is picking the right ones, picking the ones that are going to have the most impact. One of the things that I worry about is that sometimes we try to be too many things to too many people, and I think and we're contemplating a situation where we would partner with a developer, in a minority area that has a project that will really make a difference in a neighborhood. And, I think we've done some really good things, but, sometimes anyway, we're considering that it would be a substantial investment along with the development group in, let's say a south or a west neighborhood, the mayor's best southwest. And I think sometimes doing something that's really major can be a catalyst in a neighborhood that would attract a lot of other investment. And those are the type of things we're looking at. Not that we're not going to do what we have been doing, but that is something that we're seriously considering and looking at, and think that it can have a real catalytic impact on a particular neighborhood. So kind of doubling down, if you will, in a particular area.
Great. Thank you, Mark. So this is my final question, and this is open for all of you. What kinds of, it's great to see the progress made over this last year, but as we look forward, what kinds of commitments have you made to enhance partnerships over the next 5 to 10 years? So we start with JP Morgan Chase, and then others can join in after.
No, thank you. And I just to pick up quickly on that last question for a moment, because I think challenges are important, and I'll make it quick. But one of the things that we realize, just like as we advise our businesses, is we all want to solve so many of these challenges at once. And I think having a targeted strategy, and I heard Mark mention focused, and just as you'd advise a client, what are the 3 or 4 things that you really want to focus on to be successful as a business? Or what are the 3 or 4 attributes with each of our financial firms we want to focus on to be better in the community? And in our shop, and I've heard, I think it was Eric and Mark and probably all of us, Scott as well, for us, it's jobs and skills, small business expansion, financial health, and importantly, neighborhood revitalization. So I think for us, our challenge probably a couple of years ago was we were probably trying to do too much. And with focus and pillars comes, I think, an ability to track. I mentioned accountability earlier, and let me morph that into the kind of commitments. You've heard me mention it kind of throughout this session today. We've led with some of the financial commitments, which just last fall, it's investment of $600 million that I referenced, and then just yesterday, a fairly large announcement for another $150 million, targeting many of the areas that we've talked about today. So, as I've mentioned a few times, I think we're all trying to dedicate the financial resources at a much more intense pace than maybe in the past. But we're also the mindset, I think, I've mentioned it earlier, our employees, senior management, are holding each other accountable on many levels, I think has also accelerated quite a bit. So it's not just the financial commitment, it's the emotional commitment to actually make that difference.
And I would just add to what Tony has shared, because it is very important to have a strategic sort of focus in terms of how we're approaching it. I firmly believe that companies are only as strong as the communities that they serve. And when we think about the type of community development work that we're doing, it has to be community-led, and it needs to be comprehensive. And so when you think about the Invest Southwest initiative, for instance, that's a perfect example of the mayor demonstrating the leadership to identify the communities that need the types of investment that will be important for revitalization, and then making sure that we can have a comprehensive approach that addresses education, workforce development, housing, and employment. Those are all the things that are going to be successful for community revitalization. So at BMO, we were pleased to be one of the first corporate partners with the mayor in investing $10 million as a major gift to United Way. And again, to approach that in a very comprehensive approach to how we can invest. We've made a big investment in Austin as part of that, and we look forward to being able to partner with them and to be able to partner with the other banks and the other major companies that will be important for bringing that sort of revitalization to those communities. It also means being bold and transformative. We have obviously been through a very challenging year and a half, and thinking about the disparities that we've seen with COVID. And so we decided to build a partnership and deepen that relationship that we have with Rush University. So just last month, we announced a $10 million gift to Rush University to launch the new Rush BMO Health Equity Institute that will provide additional access to healthcare to residents on the west side of Chicago. Those are the types of opportunities that I think are very transformative and that will have a long-term sustainable impact on allowing us to reopen in a safe way, but to also think about ways that we're addressing the systemic and structural barriers that have existed here in our community that have created the tales of two cities in Chicago, for example, that we want to make sure that we're addressing.
Yeah, I'll just chime in. I mean, we're all focusing on a lot of the same areas of support. I think one of the things that you hear, though, is that it is really, as we've looked historically, there has been a significant focus and investment on unique key areas of opportunity. I think what is very much recognized now is that we all have to take a more comprehensive approach so that all of the capital and support that is going in to try to overcome an inequity or solve them isn't simply leaking out because we haven't addressed a more comprehensive set of issues. Those have been highlighted today as we look at, obviously, the importance of home ownership and the access to affordable housing, the importance of access to affordable healthcare, the investment in our communities really to eliminate food deserts and to ensure that we're investing those kinds of investments ensure actually the increase in value of homes and help to share in the creation of wealth. And backing it all with the education and support that all of these institutions are committed to provide. But the key is it is comprehensive. And if we don't approach it that way, we'll look back at our history where there has actually been significant capital invested, but not in a comprehensive way. And we haven't realized and overcome, unfortunately, these continued systemic issues that we're facing today. And I think here you've got a group that has no tolerance for us having this conversation in the years ahead. We need to talk about the progress we're going to have and that we recognize the only way we're going to do it is to do it together.
Well, I'll just make a comment that regarding the next 5 to 10 years, I kind of tipped my hand with my prior response. I'll probably get in trouble when people find out what I said, but what the heck? But that said, you know, the groups that we've worked with for years, and all of us have, you know, in this panel, the CICs, the NHSs, the, you know, Chicago Community Loan Fund, et cetera, et cetera, et cetera. They're just not in the past. They're moving forward. I mean, last night I was at Jack Markowski's retirement party, right? He ran CIC for the last 15 years. And it wasn't talking about what he did, his history. It talked about where they're going. And all of these groups, we are fortunate, I think, in this city. Maybe all cities are the same. I guess I've been here so long that most of my life that I don't really know what other cities have. But we've got phenomenal CDFIs in this town, right? That are really, really good. They focus on different elements, and they're moving forward, and we're going to continue to move forward with them in addition to the other things that we're talking about. So I'll stand down. Thanks, everybody.
All right, that was it for me, Treasurer. You want to take over?
As we come to a close here, this has been so awesome. We just have a few more comments, so bear with us. You know, I was looking at the time and I said, how do you rush a conversation such as this, a very important conversation? So thank you all for just really bearing with us. This has been great progress, as you can tell, and we're certainly inspired by the possibility of not just moving forward, but moving forward together. And as we've mentioned today, there are many solutions to these problems, and they will take all of us to put actions behind our commitments to do better. And we know that talk does not make lending more equitable. Talk does not put Black and brown leadership in our boardrooms or give opportunities to the young Black and brown students and professionals who have just as much right to be in this industry as anyone else. We also know that talk does not turn things around for our neighborhoods that are living legacies of redlining and segregation, and yes, unfortunately, slavery. Only action and leadership can do those things, and we need more of both. I'll tell you that I am encouraged by what we've heard today. I have to admit that it's a very big deal that we have executive level members like CEOs, VPs, presidents that are coming to the table together to address and speak to the community. I've never been one that has been satisfied with the status quo or even partial steps. As you can see today, we are making great strides. When I think about all of the high-level executives that we have on the line today, I think, when and where have you seen this? Not to mention, and Tony had spoken this earlier, there are typically competitors who on Wall Street you would not even see in the same room to collaborate. So please know that State Treasurer Ferrix and I do not take that lightly. That alone gives us hope that we have CEOs and vice presidents and presidents publicly verbalizing their commitments, publicly verbalizing their commitments. And that's why I look forward to continuing this work with even greater dedication over the next year. In the meantime, please continue to stay tuned. I want to welcome a very special guest who has sat and listened to us for the last hour, but I know that he's heard a lot and learned a lot even from the membership that he has. Ben Jackson is the Executive Vice President of the Illinois Bankers Association. Vice President Jackson, the Illinois Bankers Association is the voice of the banking industry here in Illinois. And you work to create a positive business climate that benefits the entire banking industry and the communities that our banks serve. We thank you for joining us today to share some of your thoughts on what equity means to the banking industry, why change is so important, and how the Illinois Bankers Association is supporting residents' calls for banks to make more critical changes. We want to take a moment to allow you to speak and address the panelists and those that have attended this conference on today.
Well, thank you very much, Madam Treasurer. I don't know how I follow your wonderful concluding remarks there, but I'll try and do my best. My name is Ben Jackson with the Illinois Bankers Association, and I just want to express our gratitude to the treasurers for putting this together once again for a second year in a row. We hope it's something that will continue not just on an annual basis, but that we have regular discussions through the AEBC and other opportunities to get together and talk about these very important issues. We're humbled to partake in today's program, given the enormous weight of history behind Juneteenth celebrations. And beyond today's discussion, I want to point out that we're grateful that the banking leaders were here today to talk. There are other major banks that have pledged to join the treasurer's offices to better focus their philanthropic and community lending efforts through the AEBC. Now, Treasurer Conyears-Ervin and several of our bank leaders today provided some startling statistics on persistent disparities in banking services. I can assure you we all share the same goal: equitable access to financial services and wealth building opportunities for all Illinois residents. Yet, as you heard today, we acknowledge the historic and institutional challenges have created barriers to equitable financial access, particularly for Black and Latinx communities in Chicago and beyond. Over the last year, as you heard today, we saw banks announce transformative investments to address historic disparities through diversity and inclusion initiatives, workforce development, and community lending in underserved areas. I want to point out that committing to progressive and inclusive solutions is not a new concept for our industry, though. What is new, however, is the enormous breadth of these commitments and the fact that diversity benchmarks and minority lending goals are now built into banks' corporate accountability measures. And that is good news for minority entrepreneurs, home buyers, and frankly, it's good, as you heard today, for the business of banking. You've heard today that banking leaders realize there's a wide runway for improvement. Changing current conditions will take more than just individual banks creating their own action plans. It will require deliberate conversations with policymakers, with the AEBC being a leading example of that. It's also going to take national deliberate reassessments of our housing system to tackle these barriers. And in conclusion, just want to thank the banking leaders that were here today. I would point out they're all IBA members, and it's good to see our friends in banking leadership. And also thank you again to our good friends and partners, Chicago Treasurer Melissa Conyears-Ervin and State Treasurer Mike Frerichs. And finally, I want to give a special shout out to the staff in both treasurers' offices. They deserve high praise. They've ensured that this commission is responsive, collaborative, and over time, it will create opportunity for communities of color throughout Chicago and the state of Illinois. As an industry, we look forward to growing this partnership in the coming months and years. And thank you very much again to both treasurers.
Great. Thank you, Ben, for your remarks and for being here today. And again, thank you, Treasurer Conyears-Ervin, for your partnership on the Advancing Equity in Banking Commission. We are pleased to work alongside you and our friends in the industry and to seize this moment, make real systemic change that can improve the quality of life for African Americans within the great state of Illinois. And I am thankful for this dialogue with each of our panelists today. Your efforts are encouraging and tell me that we are headed in the right direction. We hope that more banks, organizations, and institutions step up and do the right thing and make some things right that have been wrong for centuries. It's sad that we are even still having conversations about the importance of diversity, equity, and inclusion. Access, representation, all of these things are paramount to bringing true change. And we know that these changes improve our decision-making and make our businesses better, stronger, and more profitable. Today, you all have shown us much needed progress, and we hope you keep with momentum and have additional updates when we meet again. We also hope this inspires other banking institutions to do the work and to make necessary changes to bring equity to their organizations. As Maya Angelou said, do the best you can until you know better. And when you know better, do better. So let's continue to work together and do better. Thank you all for your time today.